Thank you for watching. We're going to investigate the FIRE movement today. It's called Financial Independence, Retire Early, otherwise known as the FIRE movement. These are folks that want to retire early. So we're going to look at how to retire early in 12 years. So I want to thank you for joining us here today. My name is Richard with Wisdom Investor here. We're all about providing valuable information on accumulating a nest egg for retirement and building your financial wealth. You may have seen some of these videos where somebody's 30 years old and they retired and wonder how in the world did they do it. And we're going to investigate that and just look at the overall concept here, how people do that. And we're also going to look at some scenarios here and see if it is something that the average person can do. So let's get started here. Again, financial independence, retire early on the FIRE movement. How much money will you need to retire early? So we're going to look at some different categories of income here and see if these levels of income can make the FIRE movement work. We're going to look at the $30,000 level, $50,000 income level, $75,000 and $100,000 level. Now before we take a look at the analysis on these levels, we're going to take a look and see what the overall concept of the FIRE movement is all about. There's 5 key ingredients to the FIRE movement. First one is, of course, income. You're going to need some income here. 2 is calculating how much you can save, and we're going to take a look at that here in a minute. Expenses, what are your expenses? Your investment rate on your savings and your withdrawal rate. Now, just to give you some history on the FIRE movement, financial independence, retire early. Basically, it was started by some high-tech workers here in their 30s looking for a way to get out of the business and be on their own, and so they came up with this FIRE movement. So it's a lifestyle has been getting some traction, mostly from those in their 30s that are fairly well paid. The goal is to save as much money on what they spend and invest this money so that they retire in about 10 years. So that's the overall concept of the FIRE movement. So the major goals for participants in the FIRE movement was save between 40 to 70% of their income. Now traditional savings is 10 to 15%. And the goal is to save about $1 million and then calculate how long that money will last to retire early. So how do you get those savings here? Here's how it's done. Reduce cost of housing, trim down cost of transportation or car, lower tax liability, keeping cell phone service costs down, cost cutting of utilities, take advantage of credit card rewards, add multiple income streams, and cut grocery costs. So these are some of the ways to cut the expenses and to make this FIRE movement work for you. Then the last phase here, once you've reached your number, after you've achieving critical mass, a critical mass being where you have enough money to do what you want to do when you want to do it. Then you calculate with how far your money is going to last, withdraw the money using the 4% rule. That's typically what the FIRE movement uses, is the 4% rule. So we're going to look at these scenarios here on 30, 50, 75,000, 100,000 and see if that would work. Okay, we're going to see how much you need to retire early. And we're going to start with this first scenario, $30,000. And in all these scenarios, we're going to cut our expenses by 50% of our income. So we're going to attempt to save 50% of our income, and we're going to invest that, keeping our expenses down. We're going to invest that, and we're going to see how many years, if we can do it in 12 years. Now in this scenario, we're going to use a person, say about 40 years old, and they want to retire in 12 years. They're going to want to be about 52 or so. In the original FIRE movement we just mentioned, these were folks in their 30s making high income, and they were looking for a way to retire early, saving as much money as possible. So we're going to draw a scenario here, a 40-year-old. Now, a person in their 30s, you're going to need over $1 million because you're going to make that money last. Okay, it can be a tough road, believe it or not, being retired at 30, because you've got to make that money last over 40, 50 years. So it is quite challenging. So I'm going to use a more realistic goal here. And of course, you can make the goal whatever you want to do depending on your situation. We're going to start with $30,000 here. So I've drawn up a scenario and investigated this. Let's expand this out here. So here's a scenario, $30,000. We're going to save $15,000 a year. Okay, we're going to save $15,000 per year, cut our expenses by $15,000. And we're not talking about taxes here. This is pretty much, say, after-tax income. And we're going to say this person had $25,000 to start with, and they're going to invest it at 8%. They're getting 8% on the money. So where do you get 8% of your money? You're certainly not going to get in the savings account. Okay, the S&P 500 has averaged 9% over the last 50 years. So this would be investing in the stock market. You don't have to be overly risky on this. Then another scenario would be using 5%. So at 8% return, you're going to, and you follow this plan, you're saving $15,000 per year. You start with 25, 8%. You're going to end up with about $403,000. And that's the number that you're going to need to achieve your fire movement number. So 15,000. So let's break that down just a little bit deeper, what that would give us. So again, we're talking about that $400,000. We're going to withdraw it at a 4% rate. And so you're going to be 52, 40, started at 40, 12 years. You could achieve that by saving the $15,000 per year and investing it. And you're going to be about 52 when you retire. So that needs to last you about 35 years. Estimating that puts you about 87. Okay. Again, we're just drawing this out. What is the savings? We have about 400,000, and we're going to be able to take out about $16,000 per year. So that means you'll need to live on $16,000 per year. So that could be a tough thing to do, living on $16,000 per year. Where are you going to live on that? I would be assuming you got your house paid for, medical care, health insurance, and things like that, as low as possible. So you're really going to have to reduce your expense. You might even have to live in another country. You probably could live in a small town in Mexico on $15,000 per year. So that's the concept of investing at 8%. Now, let's just say you're a little more conservative on your investing and you only invested at 5%. It's going to take you 15 years to get close to that 400,000. At the 8% level, you could do it in about 12 years. At 5%, it's going to take about 15 years. So you would start at 40, you would be approximately 55. Let's take a look at our next scenario at $50,000 income, and let's just see how the breakdown would work on that. So here's our chart on 50,000, and we're going to save 25,000 of our 50,000. Live on 25,000, and we have a $50,000 savings. So 8%. That's going to grow to $694,000 here. Okay, if you invested at 5%, the average 5%, it's going to take 15 years to achieve this. Okay, and if you do it at 8%, it's 12.3 years. So you can see that you would be able to do it in 12 years. So let's take a look at a breakdown here. So you're going to be living on about $25,000 income. Your money is going to grow to about $694,000. So we're going to adjust our calculator here to approximately 700, and you're going to go for 35 years. So to withdraw that at a 4% rate, that's going to give you about $28,000 in income. It's a little bit more doable situation. Now, one thing I would definitely recommend, especially for the person in the 30,000 range, if you're going to try to live on 15,000, first of all, it's a good idea to maybe even do a part-time job or have some supplement income, okay, to help that person in the $30,000 area. 50,000, same thing. You may want to have a part-time job or supplement your income and continue building your Social Security. That would be really important. If you could continue to build that till you're up into your 60s, then you're going to have a supplement of income once you get over 62 years old. And the average Social Security is approximately $1,500 per month. So that's our 50,000 rule. We've looked at 30 and 50. Now we're going to look at 75,000. Okay, we're going to look at the $75,000 income level, see what it would take to retire early in 12 years. So here's our chart on the $75,000 level. And in this case, we're going to live off of half of it, save $37,500 per year. We've started with $80,000 to begin with. And if we invested at 8%, we're going to have about $1 million by the time we retire at 52 in this case. And that's 12.2 years. Now, it's get 8% return. Now, if we get a 5% return, as you can see over here, it's going to take 15 years. So that's living a little higher lifestyle, 37,000. Now, the average lifestyle or income for a person, say 55 and older, is about $35,000 per year. And a lot of that's going to depend on whether you got your house paid for, etc. But as we go up the income level, you're probably going to want to have a little higher standard of living. At the $75,000 level, living 35 years at 52, past 52 years old, you're going to have about $1,000, or excuse me, $1 million saved up. And then let's look to see how much we could withdraw if we had saved approximately $1 million here. And we're going to withdraw 4% of that money. And so that's about $40,000 per year. It's going to last us about 35 years. And all these scenarios, too, they're based on investing at 70% stocks, 20% bonds, 10% cash. And you have about an 86% chance of making that money last another 35 years. So in this case, you would be able to withdraw $40,000 and to have a little higher standard of living. Okay, so let's take a look at the scenario with $100,000 income. So you're going to save at least 50% of your income, cutting back as much as you can, living on the other 50,000. So let's take a look at this scenario. 100,000 here, income. You've already saved 100,000 in this case, and you have a savings of $50,000 per month. At 8%, that's going to grow to about 1.2 million. So at age 52, you're going to have 1.2 million. So you're going to have a little higher lifestyle, and that's only going to take, at 8%, it's only going to take 10.5 years. So it's a little quicker result. Now, if you at the 5% level, it would take 12 years. You want to have a return on your money of 5%. That would last 12 years. So let's take a look at what 1.2 million, it's going to last us 35 years. Hopefully built up some money and credits in Social Security that you'd be able to withdraw and also to live. But this would give you about $48,000 income to live on, and you would definitely have a higher level of lifestyle. That's withdrawing it at a 4% rate, and of course investing it in the market so that it continues to grow. If you're withdrawing your money at a 4% rate. So ideally, you want to have a higher, at least a 6% return. 6% after tax is probably going to be more like 4%. But you want to have a higher return on your money than what you're withdrawing so that it will continue to grow. And again, there could be emergency situations here, so you want to make that money last as long as possible. So this is our investigation into the FIRE movement. Financial independent, retire early. Just taking a look at the actual numbers. Again, the overall concept of this was started by those who are making a lot of money and it was easy to save. So I wanted to take a look at some different levels. Is it possible to save money and retire early at various income levels? So I want to thank you for watching. Leave your comments.